Black family in its original great form, and they're doing an amazing job, and they're bringing together experts who are doing awesome things. Today, Dr. Alicia is going to do a presentation around noon. I'm going to do a presentation right after her, and really on uh-oh, hold on how stock options can be sold as a family and ways you can use that as a family business to generate enormous amounts of income. And also, they've got real estate experts. They've got all kinds of great people in there that are just doing amazing things. So, blackfamilyconference.com is the URL if you want to join. If you didn't get a chance to hang out yesterday, feel free to go take a look. All right, so the reason I wanted to still do class for a minute is I want to explain why the stock market crashed. If anybody noticed yesterday, you might notice that the stock market just got body slammed in a way where I've mentioned that before, that this was going to happen. You know, you're going to have this occur periodically, and what's really kind of strange about this crash is that it was kind of unnecessary. It was kind of a Trumpism. You know, Trump is always trumping. And so basically, he decided that he was mad at China, and because he got mad at China, he dropped a big tariff on China, and that big tariff and just the threat of the tariff initially, and then the actual tariff itself, led to a massive market decline. A lot of the stocks that you guys own have been hit pretty hard. You know, the stocks that we've talked about. I think Oklo, oddly enough, Oklo didn't go down. Oklo still kept going up, which is crazy. And so I know a lot of you have made a lot of money from Oklo, but there are a lot of other stocks that pretty much that took a bath, right? And the key thing is that it's preparation. Preparation is the key to success in investing and in life. So basically, if you were prepared and had some puts in place and some things like that, you probably didn't get hit as hard. Also, if you're a long-term investor, that reduces your risk. If you're diversified, that reduces your risk. So while risk is something that doesn't go away, it is something that can be mitigated, right? You know, you can take a bad situation and make it less bad by preparing. Preparation is very important when it comes to investing. So everybody type the word prepare in the chat if you get what I'm saying, if you believe me. Okay, so type the word prepare in the chat. That's the word. And also, I want you to also think about preparation in terms of preparing for the next uh, decline, for the next crash. And remember that, so, you know, you don't know how long these things are going to last. You don't know if it's going to last a day or a week or a month. And so people, you know, a lot of people that are trained on the stock market, they'll talk about buying the dip. They'll say, "Yeah, I'm going to buy the dip. I buy the dip. I buy the dip." Well, the question is, are you really prepared to truly buy the dip? Meaning, you know, you saw the market decline, and do you really know, like you know, that New Edition song, "Tell Me, Baby, Can You Stand the Rain?" Like, you know, are you fully prepared to buy the dip and know that you might be dipping for 2, 3, 4 years? Sometimes that happens. The Japanese market dipped for over 20 years. That can happen, right? So I want everybody to kind of know that too. I don't want you thinking that this is the worst that it can get. No, you ain't seen nothing yet. You ain't seen the Great Depression. You ain't seen you know, a scenario where it takes 2, 3 years for the market to recover. Okay. So that's the big thing too that I want you to keep in mind is that these markets can just be really fickle, really volatile, really strange, and there's some economic fundamentals that are very disturbing. And what I want to do is actually I want to go through a quick little analysis of what's been going on. I also want everybody to know, everyone who does stock options with us in Prime, I just did a really long 2-hour Q&A that I'm going to send you guys out later on today. And so if you want to study options with us. If you're not on the text list for Prime, the options income class, just uh-oh, text the word options to the number 87948. Just text options to 87948. All right, so what I want to do is I want to share with you guys. I told you all I have this secret fantasy, and it's nothing weird or nothing. It's like I want to be like the like a music producer, you know, like where I just really want to make movies and music, and AI has opened that door for me. So AI is so much fun, and in fact, we actually have a club that we started with AI called AI Empire Society. And when that's ready, I'll invite you guys to join if you want to participate. And so I made another music video. You guys liked the last one so much, and it's your fault because y'all gassed my head up so much. Remember the song we did for reparations, and y'all loved that, and you wanted it as an anthem and everything. I was like, oh my God! I told my wife, I said, you know, I have the ability to be the greatest rap producer on the planet, and but I'm not just stuck in rap. I can make any kind of music, and it sounds as good as Drake and everybody else. So this is gonna be fun. So I decided to make a song about bricks. Anybody know about bricks? So I'm gonna be the best financial music producer on the planet. Like I'm opening up a whole new genre of entertainment. Y'all feel me? Are y'all with me on this? Like we about to go exponential with this. We going interplanetary with this. We leaving the solar system on this sucker. We going to another galaxy. So I'm literally opening up a whole genre I call financial music, right? So I'm like, I guess Diddy without the baby oil, but if it's only financial stuff, right? So maybe that's it. B Diddy. That might maybe that's my new name. It's B Daddy. B Daddy. I'll be Daddy. I am somebody's daddy. So there we go. All right. So let me play this song. Here's my song about bricks, and you know, it's just fun to do. So let me just play it. And if you don't like the song, at least you'll get an education about bricks and why bricks matters. If you know about bricks, how many of you know about bricks? Bricks is Brazil, Russia, India, China, South Africa, and they're trying to create this alternative currency. And so everybody feels like bricks is going to be the next big thing that's going to kind of take over the world, that it's going to devalue the dollar, and that is part of what they refer to as the debasement trade. The debasement trade pretty much says that as the value of the dollar is declining with these alternative currencies, that might explain why the price of gold keeps going up. The Trumpisms and tariffs and everything isn't helping, and there's a lot of factors happening right now that are concerning to people that are into the growth of the dollar. So here's my song about bricks. So y'all first one is going to get the first release. So let's just play this. I'll put a little video with it too, just in case. So here we go. Let me play this. Let me know. Give me a yes in the chat if you can hear the song, and I put it on my in my Instagram, which is Dr. Boyce Finance. So you can go there and comment if you want to as well. So let me know. Give me a yes if you can hear this. I want to make sure my audio is good. So here we go.
They been printing dollars like confetti in the wind. Now Breach said, nah, we gon' build from within. This ain't conspiracy, it's economics in chess. You can't leave forever when the world's unimpressed. See, the dollar used to flex like the only big boss. Every country paid tribute, that's American sauce. All deals, trade bills, all priced in green. If you ain't got dollars, you ain't in the scene. But now Brazil, Russia, India, China, South Africa too said we tired of the rules that only favor yo. So they linked up tight, that alliance was born. Building banks, new currency, rewriting the norm. Greeks got next, they building their own check. Moving in silence while the West just flex. Gold in they vaults, trade with no debt. If the dollar keeps falling, what you think comes next? See the Fed print trillions, inflation on tilt. That's how empires crumble, same way Rome split. When your money lose faith, it's a global disease. Other nations start saying, yo, we don't need these. Now China buying oil in yuan, that's a move. Russia selling gas for gold, that's a groove. They setting up systems outside of SWIFT. No Western permission, they controlling the shift. Yeah, Greeks got next, they changing the deck. Building with purpose, not just a check. Watch the trade routes, the global connect. If power is money, then watch who's next. Yeah. They stacking metals, landing red tech. Digital coins, yeah, they playing that bet. America's sleeping, fighting over debt. While the world's moving on, collecting respect. Now I ain't saying panic, I'm saying prepare. Cause wealth moves quiet while we argue in air. Start buying assets, get your fam aligned. Every shift in the dollar is a chance to grind. Yeah, they printing money, we printing gain. Financial literacy, that's how we reclaim. If the system's changing, better know what's next. Cause the future ain't promised, it's who learns best. Yeah, Greeks got next, yeah, they changing the text. Global reset, no fear, just checks. Black wealth rising, we ain't done yet. Let's build our own bank, collect that respect. It's the new world rhythm, same old test. Who controls resources, gon' control the rest. So keep your mind sharp, your money on deck. Cause Greeks got next. Yeah, Greeks got next. Yeah. Want me to write the next one in the same teaching style? Maybe when the Fed sneezes, or follow the dollar. Yeah.
What do y'all think? Did y'all get it? Did you at least maybe you didn't like the music? I don't know if y'all liked it or not, but I hope you liked it. Either way, okay. Thank you, Yvette. She said that's fire. Okay, that's great. Just call me DJ Khaled. All right. So anyway, that was about bricks, and y'all know about bricks, and it is something to pay attention to. It does not imply that the dollar is going to collapse tomorrow, though, right? There's a lot of people that they make a whole living on conspiracy theories and predicting the end of the world, I'm not one of them. The BRICS is powerful for sure. BRICS is necessary for sure. There's a lot of biases in the global currency system for sure, but BRICS it has a big job because the dollar is very powerful. It's really, really powerful. So just keep that in mind. Don't freak out. But there is an increase in the price of gold that is concerning to a lot of experts because it's basically showing that there is kind of this idea that the dollar is being debased long term. They call that the debasement trade. All right. So let me and now what I'm going to do is I'm not going to keep you guys for too long because I want us to go to the Black Family Conference. If you want to join us again all day long, we've got nothing. My brother actually is running this thing, but it's digital and it's free for everybody in here. And literally, he's pulled together probably 30 or 40 experts that are in different areas related to building the wealth and the power of the Black family. So Dr. Alicia is going to do a breakdown of the drama-free family later on this afternoon. I'm going to do something where I'm going to talk about families that are selling stock options together as a group and generating lots and lots of money. You'd be shocked. I'm actually going to blow your mind when I show you how much money a family can make per month with by just pulling their resources and using stock option sales as a business. And then there, but if you like real estate, we've got real estate experts, some of the best out there, from Julian Gordon across the board to artificial intelligence. There's just a lot of stuff happening, right? And I'm excited about it because at the end of the day, Black people should be educating Black people anyway. Right? I just really believe that we know what the heck's going on in our communities. We care about our people. We want to see our people win. I don't know if politicians want to always see our people win. I think that they want to see their people win. Again, I respect anybody else's opinion on this, but I personally think that when you're talking about fixing Black economics in general, you got to go straight to the bloodstream. You can't just you can't just sort of throw out, let anybody just throw out any old okey doke solution. Unqualified people too, they're highly unqualified. Most of the people that we are sort of putting our faith into to educate our kids or give us economic power or to represent us politically, they don't know nothing about what it means to be Black. Most of them are not Black, and then the ones that are Black, a lot of times they're not really black. Like they're not African American people. It might be a Black person who was born in another country, or a Black person who's got the white husband and just whatever. Like I'm not saying that they don't know anything. They know politics for sure, but they don't know the African American experience. And again, some of you are not African American, and you're welcome here. Anybody that comes in here that shows love is respected. But at the end of the day, when you talk about fixing Black economics, that's going to be fixed by Black people. African American economics is going to be fixed by African American people. So when I see someone run for governor, president, mayor, whatever, and they say, well, here's a Black person just like you. I say, well, are they just like me? Do they understand me? Did they go through what it did? Did they grow up on the south side of Chicago? Do they know what it's like to have their daddy disappear like my daddy did when I was a baby? Do they know what it feels like to marry a Black woman like I did? Do they understand the game and what's in front of us, or are you just putting someone up there and just sort of giving me identity politics? I don't think identity politics actually works. It only works if you're not thinking carefully about what it really means to solve a problem. So I'm here to solve a problem, and that's just what it is. Now, what I want to do is I want to break down the stock market crash for you really quickly, and really not just talk about the crash itself. Remember, this decline in the market yesterday could easily be reversed. It could disappear tomorrow or Monday. And remember, historically, this is all the data I went through when I wrote my dissertation. Basically, typically, whenever you have the best days in the market, it usually follows the worst days. So when things go really bad, you have a high probability of having a day where everything's super, super good. Or if things go super, super good, you have a high probability of things being super, super bad. But the problem is you never know how the trend's going to play out. It really comes down to how they handle the government shutdown, how they handle the tariff situation, a de-escalation in this situation between Trump and China could go a long way. Remember, Trump is a guy that regularly over negotiates in order to gain power. He's an extremist in certain ways. Like, so what Trump would do, for example, is back in the day, 20 years ago, before he became political, if a journalist wrote a bad article about him, he would go sue the journalist for like $200 million, right? He wouldn't sue him for $1 million. or sue them for simple damages. He would sue them for such an amazing amount of money that it's going to like shake them in their boots, and then they would eventually end up settling the case because they're so scared of the even the small probability of losing that lawsuit. So with China, I see Trump just saying 100% tariffs because you won't do what I want you to do on rare earth minerals. But China's not really a punk. China will fight back, but China's also more rational in the sense that they're not going to fight back to the point where they really hurt China because they have vulnerabilities too. So I think it's going to be resolved. How about this? I wouldn't be surprised if they resolve it and the market then just does this. It just literally skyrockets because the whole movement to me was based on words, like what people said. It wasn't based on corporate earnings or anything like that. And so I'm not saying that you should just dive right in and not worry about it. I'm saying there are risk factors, but these, in my view, this is not. This is much ado about a 3-day issue that I don't think is going to last. But I don't know. I could be wrong. So let's just see what happens this week. Okay. All right. So let me pop in here and pull up my mind map really quick. I laid out a mind map to help you just kind of understand the architecture of market crashes and just a few things to sort of look out for and what drives these crashes. So, first thing you see on your screen is, and you only see the screen if you're in the Zoom. If you're not in the Zoom, or not in, if you can't see, then just text the word morning to the number 87948, and I'll send you a link next time so you can join us tomorrow in class. Text morning to 87948. All right, so here market crashes tend to involve a few different factors. One is economic overvaluation, global economic shocks. Shocks meaning just stuff that happens that you are shocked to experience, things you did not expect, like a regular shock. You have investor panic and market psychology. That plays a big part in crashes as well. And then you got some stock market risk factors here. And this is going to be super quick because I want us to head over to the Black Family Conference in a minute. So I'm not going to talk too long. So in terms of economic overvaluation, first thing you might want to look at here, the researchers tend to look at are two things. One, they call speculative bubbles. That's where investors do exactly what they're doing right now, which is they start just investing in everything. They're like a gambler on a hot streak. A gambler on a hot streak will bet you on anything because he just thinks he's on a hot streak, and then that's why he gains a gambling addiction and loses all his money. And so speculative bubbles can happen. And then you have low interest rates and cheap credit. When interest rates are low, people can borrow money, which allows them to speculate more. So it's like giving a gambler more of like a bigger tab where he can just keep gambling and gamble himself into bankruptcy. And also, so speculative bubbles are identified typically as prices going above the fundamental value of the stock. You have a lot of FOMO, fear of missing out. We've broken down a lot of investor psychology. And also, I talk about some of these things in my book, The 10 Commandments of Black Economic Power. So feel free to grab a copy of that at drboycebooks.com. So FOMO is big. FOMO is actually something that happens for people who are not investors. They sit on the sideline because they're scared. They don't want to take a chance. And so whenever the market starts going up, they start getting greedy and they say, "Oh, I want some of that money too." So they see a stock go up by 80% and they all dive in when the stock has already made its move. And then they end up losing because they buy late. They end up buying late. The people that make the money are not the people that buy late. It's the people that buy early. It's the people that buy during the dark times that make the money, not the people who buy when the herd is doing its thing. The herd following the crowd will get you broke, and following the crowd will leave you dusty. Following the crowd will destroy you. So don't follow the crowd. Don't be a follower. Be a leader. That's how you achieve economic success. Unsustainable valuations. That's when you get things like incredibly high to earnings ratios. The price earnings ratio is when they take the price of the stock, they divide it by the earnings of the company, and basically companies that have high PE ratios get what you might consider unsustained valuations, way above the fundamentals, and they just keep getting pushed up by the speculative bubble that's happening in the markets. Now, if you look at low interest rates, basically low interest rates can lead to easy borrowing, which allows people to just speculate even more. They do a lot of margin trading. That's very bad if the market starts getting crazy because it starts to unravel, almost like something where you wind it up really tight, and then or like I don't know, maybe an extension cord or something, and then you cut the cord and it's like right. That's kind of what happens with the market. That's what you got to watch out for. So with this decline, the market tends to overreact largely due to the structural layout of how people invest. People will borrow, 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 borrow. And then what happens is when one asset drops, there's a margin call. Then you got to sell another asset, which leads to another margin call. And then you sell another asset. One person can't pay back the other person. That person can't pay back their debtors. and it just starts to unwind and becomes a big mess. Rising rising rates also can force what they call leverage selling, right? So a lot of times selling into a down market is just something that only makes the problem worse. It's like when I got chicken pox when I was little, and the first thing you want to do when you get chicken pox is what? You want to scratch it, right? Because it's super itchy and you just want to scratch. And you know what happens when you scratch your chicken pox? That's not good, right? Bad things happen. So don't scratch your chicken pox. So that means when you get in that down market, a lot of the temptation is to sell, and the more people sell, the worse it gets. And so this is why you have to have what I would consider to be economic conviction. When you buy a stock, you gotta know why you own it. You know, it's so if you buy it, you need to know why. And why? Buy. If before you buy, you got to know why. If you don't know why, then do not do it because what's going to happen is that the minute you get tested, you're going to fail the test. You're going to walk away. You're going to get scared because you're going to say, "Oh, I just bought this stock because my hairdresser told me to buy it and it had gone up 80%." You don't know nothing about that stock, just like you don't know nothing about that man. So you ain't got no business sleeping with that man. You ain't got no business being in bed with that stock. So same thing is true here. Make sure you know why you're connecting with a stock so that when you get tested, you are able to have conviction and say, like this business. I researched it. I came to class. I talked about it with Dr. Boyce and some other people, and I know why I'm in here. It doesn't mean you're right. Never means you're right. But it does mean you know why you're doing what you're doing. So you're not like a chicken with its head cut off, freaking out and letting your emotions drive you to make bad investment decisions. So the global economic shocks, there could be a macroeconomic slowdown. Job numbers are not looking so great. AI is going to eat a lot of jobs. It's already eating jobs. AI is already eating jobs. AI is already eating. This is not going to happen. This is happening right now, and it's only going to keep getting worse. Just wait till the robots get here. The robots are really good. If you follow this stuff, you'll see that they've got robots working in factories now. So I think Amazon bought 1 million robots or something because they want to get rid of humans for the most part. But they want humans in the loop on some level, but it's going to require like kind of a different approach to the job market. So this macroeconomic slowdown is very, very real. It's not going to affect everybody the same way. You have slower GDP. That's an issue. That's to be expected. Inflation is expected to spike. That's Trump tariffs. You can thank him for that. Job losses. We mentioned that. Reduced investor confidence. That's an effect of the slowing economy. The economy slows. We get really upset about what's going on with the economy. So therefore, investors become less confident in that environment. Less confident investors don't take risk. So that draws down prices. Also, if corporate earnings start to dip, then that's when you're in trouble. When Walmart and Apple and Microsoft start coming up and saying, "Hey, instead of making 80 billion, we made 78 billion." Well, then that's going to cause major market collapses. So just kind of be careful about that. When corporate earnings start dropping, that's when we're in trouble. Geopolitical issues, supply chain, that's interesting as well. You've got things happening around the world. You got wars, stuff in the Middle East. Oil shocks can pop out. If a pandemic pops up out of nowhere, that's always a possibility. That could be an issue. Trade and production have been disrupted. You can thank the tariffs for that. Also, a lot of panic selling. That's big. People will just freak out, and they're so scared to lose what they have that they'll go ahead and bail as soon as they can because everybody wants to be the first one to leave the party when they know that the party's over. And that's hard to avoid doing because it's not fun to lose money. Personally, I'm not planning to try to run before the party's over. I'm just going to watch and see what the market gives me. And I'm thinking 5, 10 years down the line. So what happens next week is not really big on my long-term economic plan. Do you understand? Here's the thing. If you ever get nervous with investing, in my opinion, focus on the bigger picture. Generally, I think this is just true for anything in life. If you run into a short-term issue, look what again, just like with the stock, like why are you here? Why do you own this stock? Same thing. You get married and you fight with your partner. Well, why did you marry this man? Why did you marry this woman? Why is this person important for you? And if you go back to the basics and the big picture, that helps you deal with the little picture a little bit more effectively. Do you understand? The big picture ain't nothing but 10,000 little pictures all put together. So one of those 10,000 little pictures should not reshape the entire big picture. Do you follow what I'm saying? Does that make sense? And if you think that way, then that will allow you to take advantage of opportunities as they emerge because opportunities will pop up. When everybody's panicking and freaking out and quitting and giving up and walking away and determined to stay broke, you're the cool handed, what they call it, cool hand Luke. You're the cool headed person that can walk right right in there and just scoop up all this generational wealth. So be smart, be intelligent. That's how you get it done. All right, herd behavior, very big. One of my dissertation committee members, David Hirschleifer, was one of the leading experts on herding behavior. And basically, for the most part, what he pretty much showed me was that investors just follow the crowd, and even when the crowd is wrong. And I learned a lot from that. I was like, okay, so generally, as humans, emotionally, we're not that intelligent unless we make an effort to become more emotionally intelligent, right? And so don't let your emotions drive you. Definitely don't go following broke people. So following the crowd, that also intensifies declines because everybody sees everybody selling, so everybody runs. Emotional trading will get you in trouble. Reacting, if you live your life in your investing life in your personal life based on fear, you're probably not going to usually make good decisions, right? Fear is not a good decider for how you want to make your next move. Rumors, not so good. Social media is garbage. A lot of it, we know this, but it doesn't have to be garbage. I have my daughter told me that she stopped her using Instagram and stuff like that because she just thinks social media doesn't improve her life, and I get it. But I said, but social media, it improves my life. Like, yeah, I see the trash out there, but I also learn on social media. I go to places where I'm gonna get knowledge and information, right? And so I love that. But you're right, social media is just kind of everything, right? So social media influence, what it's done is it's created this entire industry of really bad financial advisors that are just giving horrible advice. And that can cause problems. That can actually make you hate investing. Also, emotional trading replaces rational decision making. We pretty much know the flaws of that. Algorithmic trading, high frequency trading, that can cause like massive amounts of selling. So a lot of the trade people that you're trading with in the stock markets are actually using algorithms. They're using artificial intelligence, things like that, where the algorithm is just deciding what to do. So what happens is a lot of these algorithms are built on momentum. So if things are going down, they'll start selling more and more and more, which can really exacerbate the over dramatic movements of the market. And in fact, actually, what I'm going to do with the AI Empire Society, which you guys, I'll invite you guys in first if you want to join. It's a collective and a group of AI enthusiasts. Let's just say that people that want to learn it, people that want to get better at it. I'm going to do a session on using AI for trading stocks. That's one of the first things we're going to do. And I'm partnering with Micah Smith, who's one of the leading AI experts in our community. And so I'll let you guys know when that's going to happen. If you want to get a notification when you can join, text the word, make sure you're on the text list. Text the word morning to the number 87948. Text morning to 87948, and I'll send you a link if you want to participate in that group. So basically, the algorithms are big, and unfortunately, that can just really make a crisis worse than what it is. And this has been happening for a long time. This is actually even what happened back in 1987 during that crash. So here's some key stock market risk factors to think about. I'll go through them very quickly because I want us to be able to hop over to the Black Family Conference. I don't want to hold you guys all day. One is volatility risk. Just when the market is scared, it starts to increase its volatility, which is a risk factor, but it's an opportunity. If you sell stock options and generate income, this might be your time. This is a time to buy stocks cheaply. It's also a time when you can get high premiums on some of those puts and calls you might want to sell. But if you're doing that in class, just make sure you're very careful and conservative and give yourself a lot of cushion for things to go wrong. But if you do that properly, you can make a dastardly amount of money selling stock options right now in this kind of environment because there's a lot of risk flowing around. And when you sell stock options to make money, you're basically selling risk. So those who aren't sure how to do this yet, just go to drboyceprime.com. You can jump in, and also you can text the word options to the number 87948, and I'll send you information on that. Liquidity risk. That's a big deal too. When you have a market, a volatile market, you have a liquidity problem. Now, we've talked extensively about how liquidity is often overlooked as an investing factor. Liquidity is the ease with which an asset can be converted into cash. So when you go into a crazy situation, financial situation, you might run into a liquidity issue. Liquidity is linked to time. Time and liquidity are siblings. They're like brother and sister that grew up together and lived in the same room in mama's house. Because when you run into a liquidity problem where you have an asset that's worth something and you need to convert it to cash, maybe to fulfill a margin call or whatever, then timing is usually the problem. Yeah, it's usually time that's the issue, right? So I basically am in a situation where because I didn't have enough cash to the side, my stock prices drop. Now I get a margin call from the bank telling me that I've got 2 days to come up with $10,000 or whatever, and I don't have 10,000 in cash. Well, then I got to go sell stock. Well, if I'm selling into a dark, scary market, then it's harder for me to find a buyer in that market than it is to find a buyer in a good market. So therefore, I have to pay what is called a high transactions cost. Like it's like a toll that you have to pay to convert an asset into cash. So we've talked extensively. The best way to avoid liquidity problems is to do what? I don't know, stay liquid. It's just like if you want to avoid being dehydrated, you drink plenty of water. But you don't start drinking water when you start getting dehydrated. You drink water before you're dehydrated. I learned that when I went down in the Grand Canyon. They said if you start getting thirsty and you start drinking water, then you're too late. Don't drink water when you're thirsty. You drink water when you're not thirsty, so that when you get thirsty, you won't be as thirsty as you would have been otherwise. That's crazy, right? So same thing is true with investing. You stay liquid, you keep your cash on the side, don't get greedy. If all your money is occupied and then you get hit with a margin call, you are going to kind of be screwed, because then you're going to run into this liquidity risk where you got to sell and you're like, man, I got to sell this stock quickly, or I got to sell this real estate in 2 days. Imagine having a $500,000 house and having to sell it in 2 days. That you're not going to get 500,000 for that house. You might get 420 for that house, 430. I don't know what the number will be, but you ain't going to get the full value for it. Do you understand what I'm saying? I know I'm talking fast. That's just I get excited. I'm sorry. I'm like a puppy that pees on your foot when I get my sister had a dog like that. When you the dog would get excited when people came over, and the dog would, like, for whatever reason, would just go pee on somebody's leg, and it was really embarrassing. It was absolutely terrible. It's a nasty ass dog. So anyway, so my point is to say, so forgive me for talking fast. That's the point I'm making here. But generally speaking, liquidity risk can creep up on you if you are not thinking about liquidity in advance. So being greedy causes you to allocate all your capital, and then when the market dips, you get a margin call, and you got to satisfy it, and you need liquidity to do that. So that's something millions of investors are going through this right now, and many of them are going through this not at $1,000 level or $100,000 level, and they're going through it at $1 million level, $100 million level. Some of them are getting $1 billion margin calls. That's going to rock the markets big time, because suddenly asset values drop because people are like, I got to sell this at any price. Never ever find yourself in that situation, because what you've done is you backed yourself into a corner where you don't have options. And we know how valuable options are, do we not? Give me a yes if you know the value of having options, right? When options are created in advance, not at the last minute. Teach that to your kids. All right, what else? You got a few other things. Interest rate risk. If the Fed does something with interest rates, they don't lower them fast enough, or they start increasing interest rates, that's going to pretty much tank everything. They have a rule that says don't fight the Fed. When the Fed is raising interest rates and they're slowing down the economy, don't be a bull in that market, because you're going to get body slammed. You want to be kind of bearish and just accept the fact that the economic gods have spoken, and they're going to decide what your fate is going to be. Fortunately, though, the economic gods are leaning more toward a rate decline, and they would probably be doing more of a rate decline if it wasn't for the Trump tariffs. Trump's tariffs created a complication where the tariffs tend to be inflationary. So the Fed has a dual mandate to keep unemployment low and to keep inflation low. So the problem is that, okay, now employment's going up, so the Feds would typically lower interest rates, which is great for us stock market investors. We're having a party, we're making money, because every time they lower interest rates, the stock market booms further. That's why you're making more money than most of your friends. But the problem is that when inflation is high, they can't move as quickly. They're a little worried. They're like, okay, we're going to lower interest rates, but we got to watch inflation carefully. Why is that? Well, because of the Trump tariffs. So basically, this creates a complication where there is a little bit of interest rate risk, in my opinion, due to the fact that we don't know what the Fed is going to do, because Trump made that decision to push forward with those tariffs. That's not really going to be good, in my opinion. I would have told him, if he listened to black people, I'd probably say, hey, Mr. President, you probably don't want to do the tariffs. That's not. Let's find another way to make this happen. But he don't nobody listen to me. All right. So anyway, systemic rules, systemic risk. There are global issues as well. We can talk about that at a different time. And then also behavioral risk, overconfidence or panic. So investors tend to overreact. They're either overconfident, they think they can do no wrong, or they're freaking out and they think everything is the whole world is burning down. I encourage you as an investor to not allow yourself to be in either one of those categories. People that overreact don't typically do well. in situations like this. So just stay cool, do a woosah, go listen to Dr. Alicia. She did a whole book on financial anxiety, how to really deal with that, how to cure yourself of that. If you go to drboycebooks.com and just look up the word anxiety at drboycebooks.com, you can find her workbook. She did a whole module and a breakdown and set of modules on managing your anxiety because a lot of you have financial trauma, and financial trauma maximizes your financial anxiety to the point where when you run into a crisis, you freak out. And the biggest thing I ever learned about a crisis is this too shall pass. If you're a person of faith, if you go to church, then just go pray. Pray to white Jesus, black Jesus, baby Jesus, whatever Jesus you prefer, and calm your spirit so you can stay focused on the big picture because you don't want a short-term situation to cause you to lose long-term generational wealth. Got it? That makes sense? Everybody with me on that? Okay. All right. So what I'm going to do quickly is I'm going to invite you all to join me over. I'm going to head over to the Black Family Conference now. The website is blackfamilyconference.com. Anybody can join. And you look at this schedule. Look at this freaking schedule. This is black people doing this, y'all. This is black people running institutions that are the best in the world. Look at the speakers. Okay, let's see. This first session at 10 a.m., which is happening. Oh, wait, 10 a.m. Yeah, it's happening right now. So you can jump into that. Keep what's yours? Taxes, insurance, estate tools for generational transfer. Come on, who doesn't want to know that? Eric Bowie, Matt Aaron, Amy Griffin, and Jasper Smith. These are multiple experts. Harvard ain't giving you this. Not with black people. No, they're not. They're not solving black generational wealth. 1045, Beyond the Single Family, Exploring Smart Real Estate Investment Strategies. Jessica Myers. Oh, she's amazing. She's done millions of dollars in real estate deals. Carrington Carter, Bad Boy. I think he's a man, but I've heard that name. He's really good. Julian Gordon, Omari Head. Oh, these I think they were the ones who bought $1 billion worth of hotel real estate or something. And Julian Gordon, that's a bad boy right there. And then Dr. Alicia Watkins, Secrets of the Drama-Free Family, how people come together to blend and blend a healthy family. That's at 11:40. And then me. Oh wait, oh that's not me. I'm not next. Sorry, I got that wrong. The Buyout Blueprint: Acquisitions and Franchises in the Silver Tsunami Era. Oh man, look at this. And there's a big panel for that. And then there's me, How to Make Money Without Working, Stock Options Investment Training. I do that at 12:40. And I'm going to focus specifically on what families are doing. There are families that are basically saying, okay, you got 20,000, you got 30,000, I got 100,000 over here. I've been saving in my 401k. Let's form a strategy where we can pull that together and create a business that can allow us to get out here and make some dang money. And so I'm going to focus on that, particularly with stock options, and talk about what some of our students are doing right now. And we'll lay that out. And there's some stuff in there that will really shock you in terms of what people are doing, the amount of money that they're able to make with some of these strategies. So we're going to do all that today. So the URL is blackfamilyconference.com. So let's head on over there if you want to hang out for the rest of the day. And when it comes to the Black Wealth thing, we got you. And we 100% black around here all the time. And if you want to know what we believe in the Black Business School, we believe that Black people should educate our own children, create our own jobs, and support Black-owned businesses. And that to me is something that is very sacred. Because I don't believe anybody's going to save Black people but Black people. But the beautiful part of it to me is that we have everything we need to get it done. We can't nobody stop us. We the best. We're the greatest. We've got everything we need. All we got to do is concentrate and focus. Focus, focus, focus. If you focus, then you will win. So everybody put the word win in the chat. If you're going to win, if you're going to make sure your kids win, your grandkids win, your great grandkids win, put the word win in the chat so we can walk over here with a good energy. All right. So blackfamilyconference.com. I'm hanging up right now, and I'll see you all soon. And so God bless you. Have a wonderful day. Thank you so much for listening. And sorry I talk so fast. I got to work on that. See you soon. Peace.